Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories. Midcaps largely flat amid a volatile session as the Nifty and the Sensex edge lower on expiry day. IT select PSU lenders show strength.
Persistent Systems fires up on delivering stronger margin bullish commentary. The management tells CNBC-TV18 it remains confident of closing FY23 with over 30% revenue growth, even as it says the third quarter saw some impact due to furloughs.
Mahindra Life Spaces soars after bagging a redevelopment project in Mumbai's Santa Cruz district. The realtor will develop 2 residential societies with a total revenue potential of 500 crore rupees.
Rallis India tumbles as weak exports weigh down earnings. Operating profit margin slides 230 basis points in the third quarter and profits decline 48%. Okay, those are the top headlines at this point in time. Earnings, they're coming in through the course of the day, of course, and we are tracking that for you. But for the markets, the weakness continues, though we have been very volatile and range-bound, consolidating at those levels of 18,120. For now, we are seeing a slight recovery from the lows. The Nifty is down 40 points. The Bank Nifty is the one which is underperforming, and that index is down 132 points as we speak. Nifty IT is the only sectoral index in the green as we speak. And apart from that, the biggest loser today is Nifty Media, which is followed by the consumption names. So a lot of consumption names expected to report results today as well. We have HUL, Asian Paints, but those stocks have come in for some profit taking today. We have ITC, Britannia, Tata Consumer, Nestle, all of them lower in trade. But you know, Reema, the global setup was much weaker than what we are seeing, at least in our own markets. We have been consolidating. So we'll have to see whether this pain continues or not, or whether we will see a bounce back, because so far this week also has been very volatile.
Absolutely. Just a couple of stocks. One is Asian Paints. Now, Asian Paints is reporting numbers. Yeah. Numbers come out during market hours, and Asian Paints has moved up to the high point of the day. This is actually the 4th consecutive day of gains for Asian Paints. And if you pull up a 1-month chart of Asian Paints, you would have seen a very sharp slide that took place in Asian Paints at the beginning of the year. In the beginning of January, there was a sharp slide in Asian Paints, and over the last 4 days, the stock has been recovering some ground, and right now, it's at the day's high, so that's up close to about 0.8%. Numbers will be coming out today. Axis Bank, too, is up close to about 0.5%. HDFC Bank continues with its up move. HDFC Bank is up 0.6%, but on the flip side, ICICI Bank and Kotak Mahindra Bank are under pressure today. So there is a divergence that you are seeing in the private sector bank moves. Let's talk about the market technicals, the index levels you should be tracking, and the trades you could be taking. Sudeep Shah, head of technology and derivatives research at SBI Securities, is now with us. Thoughts on the day so far seems quiet. Where do you think markets will end this expiry session? Up, down, the outlook for the next, the near term, and any trades that you would recommend?
Good afternoon, Reema. Absolutely. What we are seeing until now is a flatter expiry. But what's more positive is that despite the global setup, we are only down 40-45 points on Nifty. And this fall today is largely led by Bank Nifty, because we are seeing a good amount of support from the IT pack, metal pack, and the HDFC twins. So largely, I feel on a broader note, I feel that the index would be in a trading range between 17,900 and 18,250. That is for the next 7-8 sessions till budget. But from a short-term perspective, with an expiry, keeping expiry in mind, we are seeing some put writing in 18,100 strikes as well as 18,050 strikes. So that means that 18,000. So that means that 18,050, 18,070 will act as a strong support, where the 13-day exponential moving average is also placed. So until this is held, I feel that there could be a bounce back in the last 1 hour into the markets, and we could move up to 18,170, 18,180, because 18,200 at that spike price, there is some serious call writing also happening. So all in all, it could be in a range between 18,080 and 18,170 on the upside. What the issue is that the Bank Nifty is not moving now. 42,500 is now acting as a major resistance, with ICICI Bank and Kotak Bank not performing. And that's where the main area is, because if 42,500 is crossed on Bank Nifty, we feel that the next levels on the upside in Bank Nifty could be 42,800 3850 to 43,000 on the upside.
Okay, Sudeep, we'll actually come back to you. We actually have the Asian Paints numbers which are flashing for you on the screen. The net profit has come in at 1,097 crore rupees, which is a bit lower than the CNBC-TV18 poll of 1145 crore rupees. It was expected to, and the stock also has come off from the day's high as well. Of course, we'll need more details as far as the revenues. So consolidated revenues at 8,608 crore rupees, which is again lower than the CNBC-TV18 poll of 9,510 crore rupees. It is a miss on the top line for sure, a mild miss on the profitability. And this time around, it was expected to see a growth in terms of volume. So we'll get that up for you as well. This time around, double-digit revenue growth was expected on a high base and mid-single-digit volume growth. So far, it has been a miss as far as the profit and revenue number for Asian Paints is concerned. We'll be getting Mangalam as well to analyze those numbers for us in just a bit. But yes, from the basic numbers, the revenue and the profit so far, it looks like that Asian Paints is a miss right now. Quarter-on-quarter improvement in margins is something that was expected. We look at the margin number last quarter. Last year, that is, the margins came in at 18.1%. This time around, EBITDA margins are expected at 18% for Asian Paints.
Let me just read out the statement that's coming in from the MD and CEO. The domestic decorative business registered flat volume and value sales delivery for the quarter on a very high price increase base in the previous quarter. So, Mangalam, the volumes appear to be flat for the domestic decorative business. The extended monsoon in October also affected retailing in the peak festival season. But demand picked up in November and December, leading to double-digit growth for the decorative business in December. Overall, on a 9th-month basis, they're saying decorative business continue to see healthy double-digit volume and value growth.
Well, it is a miss, Asian Paints. No two ways about that. The reason why it's a miss is on a couple of factors. One, the volume growth itself has come in flat. Most of the street was working with a mid-single-digit sort of range, and the street was working with around 5 to 6%. On that, if the domestic volume growth has been flat, that is a miss. Secondly, the company says that at the same time last year was a high price increase sort of quarter. But same time last year, remember, most of the sales volumes were pushed through before the price increases happened. That was just pre the festive season. So it'll be interesting to see, how much of the impact did actually occur on account of the price hikes. My sense is that it could be a weakness on two levels. One, the unseasonal rains that we saw in October would have impacted demand. And secondly, in the second half post festive season, there was sluggishness in consumer demand, so that could have played out as well. Though the company is saying that in December the growth was double-digit, that also is in line with what a lot of the other companies are saying with regards to some green shoots seen in demand. Whether that comes by or continues into the fourth quarter or not is something that we'll have to monitor and hear the management in the conference call about. But for now, from a volume standpoint, from a revenue standpoint, an EBITDA margin as well as a net profit standpoint, it is a miss coming in from Asian Paints.
Some more internals. Yes. The international business has seen slower growth. 2.1% is the revenue growth in Q3. And the company has said that they have seen markets in Sri Lanka and Bangladesh getting impacted by the adverse forex as well as the macroeconomic slowdown. They've also said that they've seen some slowdown in the bath and kitchen business this quarter. So to take you through those numbers, bath fittings business sales declined by 11%, 10.9% on a year-on-year basis, and the kitchen business sales decreased by 7.1%.
Both those as well is, are misses, because a 10%, 11% decline in bath fittings business, which the company plans to triple in over the medium to long term, would reek of some sort of consumer weakness in terms of demand. The kitchen business as well declining by about 7%. But all of this, ties in with what the company plans to do in the longer term. That is point number one. And in the extreme near term, you have the competition, overhang looming on Asian Paints itself. We do have Grasim, which is coming about, and then we had Asian Paints announce almost a 9,000 crore capex as well, 2,000 crores in the last few weeks when we got the announcement of a water-based plant, and 7,000 crores for the back-end unit that the company, backward integration that they are doing. So the stock has recovered from the lows, though, because it was weak over the last few trading sessions, as was the entire FMCG pack. Will be, let's get in Naveen Kulkarni. Naveen, the reported numbers are extremely weak as compared to what the street was anticipating. But do you think that the street is looking ahead and perhaps taking some cues from the fact that December was good and maybe that may continue going forward?
Yeah, so if we look at the numbers per se, so this was expected to be a weak quarter, to be very honest, because our channel checks indicated that the volumes have been very, very sluggish. And most likely whatever growth would have happened, that would have happened on the low margin products. So that is one thing which was coming through. And the market also, I believe, was building for this because the stock has not done much over the last 3 to 4 months compared to even the other FMCG companies. So from that perspective, these kind of numbers were expected. However, I will say that the margin profile looks probably a little better than what we were expecting, so that is encouraging. So from here on, if December was strong and this quarter improves, I think the stock can probably do well from the current levels.
Right. You know, one thing that was surprising this time around is that while the volumes are flat, overall sales also have increased by just about 1% odd on a standalone basis, 1.7% on a consolidated basis. And this is a time when we're speaking about the company having taken price hikes to the tune of almost 20% over the last 15 months or so. Some amount of price realization growth should have come about, right? What explains this weakness? I mean, are people really looking at only the lower end of products? And if yes, then it's not even showing in the volumes. I'm confounded by that.
Yeah, so essentially, as I was saying, so the volume mix is more to do with the low-end products, which is like putty and others. I think that is where the contribution has been higher, and that's why the realization growth looks a tad slower. But in the overall context, the EBITDA margins are still quite okay, right? So that is, I think, one thing they have managed to do well. So, but I think going ahead, we have to see how the volume mix changes. I think this quarter clearly, post the management conference call, we might get more details. But I think it's very, very clear that the products like putty and all have contributed much, much more.
All right. The question is, what do you do with the stock now? I mean, you said that if things look good from here, it can be a buy right now, but you do have a lot of overhangs with regards to competition going ahead, not particularly cheap in terms of valuations as well. And that initial smidge of a recovery that we had seen has been sold into. Now the stock is virtually at the low point of trade. What do you do? It's about 18% off its all-time highs, but still not particularly cheap. Your thoughts?
Yeah, so a franchise like Asian Paints, we would be very, very lucky to get it cheap. And history has suggested that whenever things look very, very stressful from those levels, the stock has managed to bounce back quite well. Whether it happens in a similar manner this time or not, something that remains to be seen. But I would say that considering the way the market is shaping up and lack of opportunities in so many sectors, Asian Paints is probably not a bad bet as an allocation theme, right? So I think people might still allocate to Asian Paints. I don't see a huge downside. Upside is something that we can talk about, as in whether it's 15% or 20% or 10%. But probably I don't see much of downside, and it might be a still good allocation bet from 2023 perspective.
All right. Naveen, thank you so much for joining in. So that basically is the sum and substance of Asian Paints. It's a top-down miss as far as the revenues, volumes are concerned. EBITDA, I mean, there is an improvement, but that was something that the street was anticipating because of the cool-off that we've seen in the raw material prices. This time around, more than the margins is the demand, which is a problem. So let's see whether that sustains. The spike that we saw in December sustains into the next quarter or not. And until that, we get any sort of comfort from the management on that, the stock may perhaps languish.
And ultimately, people care about the EPS, right?
Yeah.
The profits itself have missed. So despite the margins coming in higher than estimates, the quantum of miss on the top line was so much that the profits have come in lower. So there is no case for, you know, any sort of EPS to move up because of the margin beat, right? That's not flowing through into the bottom line.
That's not flowing through. My sense is that post the conference call, I won't be surprised if we do actually see a few EPS cuts and downgrades as well coming in on account of the demand part. Because earlier, whatever downgrades happened were on account of margins, and now if the top line, fails to excite the street, then maybe we can see some problems with regards to any returns coming here. But then again, all of this hinges on what the management has to say about demand sustaining going forward or not.
First 19 days of January, let's see what the company has to say, whether that double-digit demand continues.
Okay, so that is, of course, an important thing to track, right? The management commentary coming in from Asian Paints. Right now, the stock is at the day's low. We will slip into a short break now and get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Lots of important conversations taking place at the World Economic Forum at Davos. And this is Shireen Bhan in conversation with Fateh Birol, ED at International Energy Agency.
Losing the energy war, at least it looks like that for the time being. And Russia was the largest energy exporter of the world as of 24th of February. Right. And if the things go like this, Russia's role in the global energy scene will be much more diminished.
You know, since you believe that Russia is losing the energy battle, and that perhaps pushes them into a corner on the back of the sanctions that have been imposed by large parts of the world, do you then fear that there will be a further escalation between Russia and Ukraine, which is what the Russian side seems to indicate, especially over the last 24 to 48 hours? Or do you believe that this will now push Russia to adopt a different strategy because it is hurting them?
I really don't know how the battlefield issues will evolve, but I really hope that sooner rather than later there will be a peaceful solution, which will be good news for Ukrainians and also for Russians and for all of us. It's my hope.
Yes, that is everybody's hope. But you know, one of the other myths that you debunked was that the energy crisis that we are currently in the midst of will set us back on the climate transition. You don't believe that to be the case. You believe that global CEOs, policymakers at this point in time are doubling down and renewing efforts to make the transition.
Exactly. It is also, it's good that you remind me these things, because again, the numbers we have last week from all energy sector do confirm. For example, 2022, the growth in renewables was highest in the history, 25% to growth from one year to another. Big growth in renewables. In terms of the electric car sales, we have never seen such a strong electric car sales around the world. Efficiency improvements, huge heat pumps, huge growth, and many countries are making a comeback for nuclear power. So a lot of clean energy sources are moving very strongly to the energy markets, because it is not only driven by the climate concerns but also energy security concerns. People want to build their own homegrown energies. So what we are seeing is that the current global energy crisis in fact accelerates the clean energy transitions, and when I look at the numbers in India, they are just very, very exciting in terms of solar, in terms of wind, in terms of hydrogen and others. India is doing an excellent job there.
You know, so let's focus on India, because you said that the numbers in India look exciting. What is exciting you about the numbers in India, especially on the renewable side?
It is because it is growing much more stronger than many people expect. Even the most optimistic people about the Indian renewable capacity expansion, it is much stronger than that. And India not only pushes especially the solar so strongly, but also looks at the manufacturing side. For example, the batteries. There's a lot of incentives for building batteries at home, and also solar panels. Now, one issue we have to all understand, that the world is going through a clean energy transition, but energy transition means industry transition. The clean energy technology manufacturing today there is one country which dominates the entire game. 75% of all electric car batteries, 90% of all solar panels, 75% of all wind mills, so and so are manufactured in one single country, China. So this is also, on one hand, I appreciate China's leading role here, but to rely on one single country, whoever this country is in the energy world, in my view, is a risky business. You shouldn't rely on one country, one company, one trade route. You have to have diversification. Therefore, India's steps in order to give a boost to its own domestic clean energy technology manufacturing is also welcome.
You brought up some of the aspects that excite you about India. Let me ask you about green hydrogen, because there is a big plan that the government has unveiled to try and push green hydrogen. The government's aspiration is that India be the leader as far as green hydrogen is concerned. What do you make of that?
I think when I look at the numbers in terms of the cost of green hydrogen in India vis-a-vis some other countries, very, very promising. And this strategy may well work. We just need to see it is implemented quickly, so that India gets a pole position in the green hydrogen sphere.
since you are excited about what's happening on the transition roadmap at this point in time, in terms of financing, in terms of investments required for us to be able to accelerate further, what is the expectation, what is the estimate at this point in time?
So it is, to simplify the thing, when I look at the clean energy investment trends, it looks like the 2030, which is a milestone for our climate change issues. We will have, the world will have about $2 trillion clean energy investments. In order to be in line with our Paris goals, this 2 trillion needs to double, 4 trillion. So there is enough capital in the world, but whether or not the capital will meet the clean energy projects, especially in the developing countries, is a key issue. So if you ask me what are the challenges to reach our climate goals, I can give you 100 things. But if you ask me to choose one of them, financing clean energy transition in developing countries. And here there is a role and responsibility of the rich countries, advanced countries, to support this transition. The responsibility is because the problem we have today, the climate change, is the concentration of carbon in the atmosphere since 100 years, and the share of advanced economies is more than 80%. Only 20% is the rest. So there is a moral responsibility, historic responsibility. Plus, they have the means to support the countries who need to accelerate the clean energy financing. So I believe if we go from 2 trillion to 4 trillion, we have all the chances to meet our climate goals. And I see some of the numbers in renewables, electric cars, hydrogen, they are really encouraging.
Well, that's good to hear. But what do you make of the loss and damage agreement that's finally been worked upon? And of course, now execution is going to be key.
The idea is excellent. The framing and agreeing in Sharm el-Sheikh is wonderful, but to say that it's a done deal, I think it is too early. I would like to see the details, who's going to pay, how much and when, and then if they are going to deliver. So before being so happy, I want to wait and see the next steps.
Absolutely. I think it would be premature to hold this out as a victory just yet. But let me end by asking you, Fatih Birol, on the back of everything that you know, and there could be many known unknowns and many unknown unknowns that the world faces. But at this point in time, how hopeful do you feel that perhaps the worst is behind us, both on the energy crisis and the inflation crisis?
I wish I could tell you that the worst is behind us, but I unfortunately see that the geopolitics and energy is so interwoven that I have never seen in my life. I had one of my usual Davos sessions yesterday, an energy session, which is, I think it's my 14 or 15 years in a row. I have never seen so many prime ministers, so many politicians who have never been in an energy session. And I told them, it is on one hand, it's welcome, but on the other hand, I wish energy was a business and free of political circumstances. And unfortunately, I think I have all the reason to be a bit less optimistic that this year we may see geopolitics and energy will be more and more interwoven, and in general it is not a good news.
No, it isn't good news, but of course you have a packed audience there listening to you, and a packed audience on CNBC watching you as well. Fatih Birol, always a pleasure. Many thanks for joining us here on CNBC-TV18. Well, that's the big view as far as the energy market is concerned. Not too optimistic. Fatih Birol there joining us here in Davos. We're going to take a break. A lot more coming up. Don't go anywhere. We're back in a moment.
आग को फैलने से रोकना